Hello everyone, this is Dan Gramza, and welcome to Gramza Market Studies for Thursday, November 12th. I am recording this on November 11th, Veterans Day, and every country or many countries take a moment to remember and to thank the veterans. And in the UK it's June 27th, and in April 25th it's Anzac Day in the Australia and New Zealand. In the United States, we use November 11th. That was the armistice, the date that World War I was basically ended. It was the 11th month, 11th day, 11th hour that the treaty was signed, and that's why we use November 11th in this country. But it really commemorates not just World War I, but all veterans that are currently serving or have served in the past. And I want to thank our veterans for serving our country who are currently out there right now, like Ned, who is currently serving in Afghanistan. Thank you, Ned. And all of the other service personnel that watch these videos, thank you. I'd also like to take just a moment of silence as a way of showing our respect for these people. Thank you, everyone. Well, now let's turn our attention to see what's going on. As I mentioned, with the 24-hour market and the way technology is, holidays or days like today are not the same as they were 10, 15 years ago. Market reaction's different, market behavior's different. One of the challenges that we discussed yesterday was that I thought we needed to get that close above that 1780. Well, we did do that in yesterday's action. If you think about now being for preparation for Thursday, Wednesday's action did do that. So what are we looking for? Well, we want to see if we can get some follow through. It did slip a little bit here towards the end. We see that also in these other stock indices. So the ideal situation is the ball is carried through Asia, through Europe, as it comes back to the United States, and we begin today's trading session, meaning Thursday. Well, let's take a look at what those currencies did, and we're going to see something just a tad bit different. In the currencies, we saw yesterday's action, or Wednesday's action, making new highs on selling, and we need to be very careful about this. You see it here in the Swissy, our friend Mr. Yen. The Australian dollar, the night session here, as you can see in Asia, this markets are already getting stronger. British pound was the weakest out of these, and we are looking for unchanged to lower. One thing I failed to mention to you yesterday was that the British pound did trade through the sell point right here. That was at 66, and it went down to 97. So the difference here between this buy point and that sell point in British pounds was 170 ticks, or $1,062.50. And it continues to work its way lower. It has reached a magnitude objective, and right now it would scratch on the second half of that trade. So what are we looking for? And we can see Canadian dollars is also grinding away at it. I think these European currencies, the euro and the Swissy, we have to be very careful. These are very bearish setups, and if it can take these highs out, like we're seeing in the Australian dollar, and this is behaving properly, this should be a big move. We would expect the same. We'd expect these moves to be large and to be able to hold those gains. So that's what we're looking for in those currencies. We're looking for unchanged to lower in the British pound. So we want to be cautious on the short side of that market. And we are looking for the Canadian dollar to continue its push back to the upside. Now let's take a look at those interest rates. In those markets, we see gold is, I said, interest rates. Well, let's go back and look at those interest rates, huh? Here we are. Interest rates, we saw the short end of the curve soften a tad bit, but really I think buyers are still in place. Same thing with the 10-year notes. Look at these things. Except it's the way we made new highs. Now, we didn't close above these highs. We rallied above them, but we failed to close above them. We've got to be very cautious about the notes. Also, the same thing for the bonds. These markets made new highs, but they were not able to overcome their challenges where we found these sellers before. Therefore, it is not real positive for these markets. Even though they're long positions now, I think we need to be very careful about how these markets are behaving. They could easily come back. Now let's talk about the metals. Gold continues its move to the upside. No signs of really seeing that abating. What you're looking at there is momentum. And it needs to slow down a little bit actually. If these days start becoming too large, like we started to see back here, that type of move is not sustainable if we go vertical. So we need to level off a little bit, continue the move, what will be sustainable if we have some smaller range days consistently in an uptrending fashion. But right now, we're looking for a continuation of that behavior. As I mentioned, yesterday, I think silver is one we got to be a little more careful of. It doesn't have that same level of enthusiasm that we're seeing in gold. So we need to be cautious here in that market. And same thing for copper. Although it reached magnitude of objective again today, so it allowed that opportunity to, and then a scratch on the market as it came back through that green line. But it's 50-50. This market needs an excuse. In the energy market, we can see that crude oil continues winding the spring up to the sideways market. It's ready for a move, but we just don't know which direction really. I mean, the benchmark candle here says to the downside. We also see strong buying here before. Neither side has been able to be consistent in terms of a strong behavior, strong follow through. The issue really, I think, is fundamentally we shouldn't be up here. And I think that's one of the reasons why this thing is struggling. Natural gas continues its move to the downside, a false sense of security. This is potentially bullish, but I just don't know if there's a fundamental reason out there to see that market rally. And when it comes to the grains, they also gave us a little push here to the upside. Soybeans traded back through this buy point here, and in that market, that would have been 14 cents that it would have picked up, or $1,200. That's the dollar value from that sell point to this sell point. So, but the issue, and then it would have been a scratch, by the way. It would have initiated a long position. Let's talk about that. So that would have closed out a short position. That would be the concept. Through that buy point, it would have created a long position, and that long position failed. If it comes back more than 5 cents, that would be the stop. This would have been stopped out on the second half, and it looks like in the night session, it's getting ready to take a look at that again. It's got a lot of challenges down here. Same thing with corn. We got above these levels that we found sellers, but they weren't able to hold on to it. We need to be careful there. And the same thing holds true for wheat in terms of its market behavior. Today will be an important day, and right now we're looking for weakness in these grains based upon the action that we saw in Wednesday's action. So for day on Thursday, it's going to be important to get follow through and to get it early in the session. Well, this concludes today's market studies. I hope you found a few ideas helpful. Thank you for sharing part of your day with me, and I'm looking forward to being with you again tomorrow. And in the meantime, take care.